Hello and welcome and good afternoon to all my participants to another edition of Business and Banking Dialogue. My name is KK and I'm the host for today's show, which is live across EPS channel, Facebook, Twitter, YouTube, and LinkedIn. Thank you for the participation in this Business and Banking Dialogue for the last 50 shows. In fact, we completed 51st show. Your support means a lot to us. Absolutely, there's no doubt about this. Without you, this show wouldn't have been possible that we could have run it for over 50 shows. It's our way of showing solidarity to the frontline COVID warriors. By your participation, we have with you demonstrated that we can fight this pandemic together with the power of information that we get to hear from subject matter experts in the field of finance. Today's subject matter expert is Mr. Suresh Sethi, founder and CEO of India Post Payments Bank. Ladies and gentlemen, you may be aware that one of the payments bank license was given to India Post. Out of the 11 odd licenses that RBI gave, one of them was given to India Post. A policy decision by RBI, which has major impact on financial inclusion for the unbanked population in far and remote areas of India. You know how big India is, and there is remote villages. So with Suresh has over 3 decades of diversified global experience in the financial services industry. In his last role as a founder, CEO, and MD of India Post Payments Bank, as it is popularly called, IPPB, he is credited with creating the largest interoperable banking infrastructure for public good at such a big scale. Prior to India Post Payments Bank, he has worked with some of the world's and India's leading financial services companies, such as Citigroup, Yes Bank, and Vodafone. M-Pesa across India and Kenya, UK, Argentina, and USA. M-Pesa, as you know, is regarded as the front runner for all financial inclusion technology and the way it was used. So we'll talk about that as we go into the show. He has held senior CXO and managing director level positions at regional and global levels. For his contribution to the financial service sector, Suresh has been recognized by the Asian Banker. He was also recognized as the CEO of the Year for the India Post Payments Bank at the Banking Summit Awards in 2019. Good afternoon, Mr. Sethi, and welcome to the Business and Banking Dialogue.
Good afternoon, KK. Thanks a lot for the kind introduction, and I look forward to our interaction.
Thank you, sir. Thank you very much. It's a privilege to have you with us, sir. Sir, what a massive scale for a startup. I mean, if I may say it's a startup because it is a banking license for a new bank. 155,000 plus post offices as public access points, 3 lakh strong postmen and Gramin Dal Sevaks. What a scale to start. For you as a founder at MD, was it a problem or was it an opportunity?
I think KK rightly said, I believe, and I think we should check out, it probably is the largest startup institution ever created because with the scale and the manpower which we had leveraged or which we were looking at leveraging to build this network and infrastructure, I think it has been unprecedented to that extent. It is a huge opportunity because, as you rightly pointed out, and we'll get into some of the discussion, primarily if we see that this was, I think, one of the government's key steps to bring in the 4th pillar of closure towards creating a financial inclusion access at scale. Because while we've largely looked at the PM Jan Dhan Yojana, where almost everybody in the country was enabled to get a bank account. And as we speak, we do understand more than 80% of adult Indian population does now actually have a bank account. So they are banked. But the challenge which still remains is the infrastructure in providing access to these accounts. And I think by enabling and creating the entire postal ecosystem and converting it into a banking institution, we were able to fulfill that objective of creating a last mile touch point where anybody who has a bank account can access their banking services, leveraging on this infrastructure. Just to share with you that by virtue of India Post Payment Bank going live, we were able to scale up the rural banking infrastructure by almost 2.5 times. So it was one single institution which was able to create or leapfrog this infrastructure achievement by just providing the last mile access. So a huge opportunity, and I think it has come at the right time, at the right juncture. And the institution is playing a very key role today in enabling last mile banking provision, especially with the challenges that we are facing today in these times with the pandemic and the crisis around it.
Thank you. So you mentioned that you have set up this huge infrastructure, and you said it's like 2.5 times you set the infrastructure up than what it was, and provided the last mile access, which is so critical for any financial inclusion. Reaching that last mile across the vast country like India is definitely a challenge, and to set up an infrastructure of that sort must definitely be a proud moment for you. Good. I also learned that by February 2020, you have already acquired 2 crore customers already. So how is it that in future, how are you going to, what is the plan? What is the infrastructure? How are you going to leverage this infrastructure from your thoughts point?
So KK, I think one of the key points to remember if we look at it it is not just about the customers that are being acquired by India Post Payment Bank as an institution. Okay. I think more or equally relevant is the point today that today we have created an interoperable banking infrastructure out there. And let me elaborate upon that. With payment and settlement systems, which are, as we know, completely interoperable. And I think amazing amount of amazing work has been done by the regulator, both the Reserve Bank of India and also by the National Payment Corporation of India in setting up this ecosystem in place. I will pick upon the fact that today when we are looking at the entire postal network, and I'll just give you some of the statistics. So we have around 135,000 post offices which are now enabled to provide banking services of India Post Payment Bank. Similarly, more than 200,000 postmen have been enabled with a smartphone and a biometric device to actually provide a complete bouquet of banking services at the doorstep of a customer. Now, the beauty of the interoperable system is that when a Dakia today comes to your house and you have, let's say, a bank account with any banking institution, you can actually give your Aadhaar number and provide your biometric access, and you can actually access your account with any organization, not just India Post Payment Bank. So that becomes a very powerful proposition. Today, what we see largely being a big restraint before India Post Payment Bank infrastructure was put in place and became a at-scale last-mile accessibility point. There were bank branches, there were business correspondents, but the last-mile access was still a challenge in some very remote locations and areas. The fact that today any bank account can be accessed means that all the 36 crore plus Jan Dhan accounts which are there, all those can now be accessed through a Dakia at your doorstep. So that has given a big impetus to accessibility, and that I think is where I'm putting the perspective across, that it is not just about acquiring accounts by India Post Payment Banks. It is about the ability to service all the accounts which have been today opened, be these accounts for Jan Dhan accounts, be these accounts for other basic service accounts, which are primarily focused on people who are unbanked or underbanked, and how do we provide access at the last mile at scale. I think that is the bigger picture over here with what this institution is able to connect at the last mile.
Thank you. So that means we have moved away from the silo banking, as we would call it, and you have been able to have an interoperability using the India Post accounts. Is that, am I right to say that?
Absolutely. So it is virtually, as I sometimes like to call it out, India Post Payment Bank is today a bank to all banks. So
Okay.
for any bank, wherever they don't have a branch, wherever they don't have a business correspondent point, actually a Dakia can provide access to those accounts for their customers, and they can easily withdraw cash, whatever transactions they want to do, they can do through the Dakia. And just to share with you a point in this regard, that during the COVID times, which you've seen when we have had the lockdown over the last 3-4 months, India Post Payment Bank has come out to be one of the top 5 institutions in the country in enabling last mile digital banking by virtue of the fact that our Dakias have been able to provide cash and access to accounts to any bank customers. And they have in fact done digital transactions, which put them at the top of the pecking order in that regard in this period.
Oh, that's fantastic. I mean, we've been hearing from the subject matter experts as to how companies have kind of tuned themselves in this COVID period to ensure that there is no interruption in their services, whether it be the bank services, the ATMs. And here you have in the remotest area, you are saying that you've been able to provide, Dakias have been able to provide cash, which is tremendous. I think, Mr. Sethi, it's a great good to hear all this, that we have not been bogged down by this virus. So it's good to hear that, sir. Ladies and gentlemen, financial inclusion is a state in which people who can use them have access to full suite of quality financial services provided at affordable prices in a convenient manner and with a dignity for the clients. The lack of suitably priced, physically accessible products and services, combined with a lack of awareness and education to drive demand, ensure that the world's poor remain excluded from financial services. And this is what India is striving to do, that we provide financial inclusion as a service to the entire 100% population of the country. There is still a huge unbanked population in the world, and India is a contributor to that. But institutions like the India Post and many others have tried to bridge this gap. And so today we're going to talk about all of this, which is very, very interesting for us to know that how the entire country is being integrated and to bring all the entire population in the mainstream of financial services. So I will go ahead and continue my discussion with Mr. Suresh Sethi. As usual, you have an opportunity to put your questions across to Mr. Sethi in the Q&A box. So ask your query, and that will come to me in a chat services, and I will ask the question across to Mr. Sethi. You also have an opportunity to ask a question directly to him, so you can do that. However, all questions need not be answered. Some of them could be sensitive, and the position that he was holding is a very sensitive position. Some questions we may not be willing to answer, so which is fine. That's really okay. So you can even ask a question directly. Sir, the trinity of JAM, Jandan Aadhaar Mobile, which is like a kind of has ushered in like a revolution into India with the era of digital financial inclusion. However, the plight of the migrant labor highlighted there is much more need to be done in this area. What are the limitations of JAM as an infrastructure for financial inclusion, and how can we overcome that?
So, KK, I would actually take a step back and first call out what are the enablers that JAM has really provided. Because as we get into it and then we try to see what more needs to be done, I think equally important to realize what has been done and what is already out there. Yeah. So I think even when I look at putting in an institution or creating an institution like India Post Payments Bank, leveraging the Government of India and the Department of Post Infrastructure, I think it would not have been possible to create the institution that we had were it not for a lot of enablers being already in place. And I will call out the 3 clear ones which clearly make a big difference over here. Because national digital identity, I think, has been the cornerstone of a lot of what we are able to do in enabling financial inclusion today, which means each and every individual in the country today has an identity. And that identity is today resident in a central database from where we can access it and provide them or make them part of the inclusive financial ecosystem. The second big point has been the creation of an interoperable payment and settlement system. Because while you can have your digital identity, the moment you're opening accounts at scale, you need the ability to access and be able to operate those accounts. And I think the beauty of the Indian system again has been that that entire payment and settlement ecosystem is a very open ecosystem. The moment you talk about interoperability, you see all the banks being a part of it, which means bank-to-bank transactions, as we all know, and which, I mean, I'm sure everybody who's listening is equally familiar. I think India today is probably at the cutting edge or one of the leading countries in terms of real-time online payment settlement systems, which even in some of the developed world, we don't have that sort of capability of doing real-time online 24/7 transactions. Now, the great part about this payment settlement ecosystem is that it has been created as an open ecosystem. So on this ecosystem, it is not just the banks which are running. We are today allowing tech and big tech to be a part of it. And when I talk about that, I'm talking about today the fact that when Google is coming as a service like Google Pay, they are able to leverage the same ecosystem to enable transactions for customers. We are able to get likewise various ecosystem players like merchants and all plugged into the same ecosystem for receipt of payments and stuff like that. So it is an open ecosystem, which is very important, and it's created at scale and touches each and every financial institution. And it is very well balanced with the regulatory and the banking aspects being run by the central bank and by the banks, and the big tech bringing in cutting edge technology to be able to create the ecosystem for simple and equal payment systems. That is the second part of the leg. And the third part clearly became with universal access. So when the PMJDY scheme was announced and launched, we have seen it has been unprecedented at the pace at which we've made sure that each and every person in the country has a bank account. India, in a manner of speaking, and these are quoted numbers, India has been able to achieve in financial inclusion because of these enabling factors in 10 years, what would have otherwise taken 46 years to achieve in terms of the growth that we've achieved on financial inclusion and getting people inclusive. Now, I think the big part, which is where I was saying the fourth pillar, which is now being complemented by an institution like India Post Payment Bank, which is again a government infrastructure being pushed into place to create the last mile infrastructure. Everybody by having a bank account, having an interoperable payment settlement system was great, but getting access to their accounts and being able to operate their accounts right from their doorstep is what has got enabled now. Now, when we look at today the plight of the migrants, I think there are two parts to it. There's a demand side and a supply side. Now, on one side, I think this entire infrastructure being placed, we have been at the forefront of being able to put in social measures to limit the impact of the. And when I talk about these, I'm talking about the ability of the government to provide subsidy directly into the accounts of the intended beneficiaries. Now that we have been able to manage at scale because everybody who had an account, who's a defined beneficiary, has been able to receive government subsidy. And as I was mentioning earlier, with an institution like the India Post Payment Bank, with the current lockdown in place, people haven't had to go to the bank branches to operate their accounts. Dakia has been able to go to their house and actually give them cash in terms of whatever subsidy was reaching out to them. The other part becomes on the supply side. So yes, there is today a huge, information asymmetry. So when we talk about the fact what has really hit us in India today, if you see, we have a huge gig economy. A lot of people, or rather 80% of our workforce today is unorganized workforce. And this informal labor today does not have a regular or a sustained, salary work class sort of security of payments. So they are earning on a day-by-day basis. They are paid on a daily wage basis. And that is where we need to connect the dots. So it is important that on the supply side, how do we create the jobs? How do we make sure that people are still gainfully employed? And therefore, other than what government has been able to step in and provide their subsidy to sustain these people, it is equally important to get the entire supply chain up and running, whatever disruption has been caused, so that people can get back to their daily wages, are able to get their earnings in place. And that is where we come to the point of saying, how do we really address the supply chain? And how do we again, connect the parts which have got broken to again rejig the economy back into place?
Okay. So thank you, Mr. Sethi. You mentioned about the four things that have enabled us to do so well. I think the out of the jam, you pointed out that Aadhaar has been one big big contributor, because we have at least an identity for every citizen, so that we are able to provide the last mile connectivity. How has Jan Dhan and mobile contributed to this overall financial inclusion?
I think it has been an extremely big factor in enabling things, and I will call about two things, because again, and I think you alluded to it in your earlier mention, I think digital financial literacy is a very equally important factor.
Yes.
Because it is not just about opening an account. A person needs to understand what they can do with the account. What does savings mean? How does a saving behavior, allow them to save money and create wealth for themselves? Similarly, learning about other things like, creating security through insurance, looking at investment opportunities. So I think digital financial literacy becomes a very important component. So one part is the financial literacy. The second equally important fact is the digital literacy.
Yeah.
Now, if you see, when we even look at the India Post Payment Bank, model, our first focus was to say, let's create an assisted banking model. So today, a Dakia is fully equipped to reach the doorstep and do banking on behalf of the customer. What we really want to move towards is a scenario where the customer can actually do their banking on their own, which means just like you and I, we open a mobile banking app and we are able to do the transactions. So that is where the digital literacy comes in. The financial literacy is equally important to understand what is it about, what can, opening a bank account mean, how can insurance help you, and so on. So these are two very important factors which we need to focus on. And when we look at Aadhaar and Jan Dhan, the key points over there have been that Aadhaar has enabled to bring people on board, because clearly, even when I look at this assisted bank model, if I go back to a scenario where it was paper-based KYC, that was one of the biggest costs being incurred by financial institution for onboarding a customer. And there was a cost to training, there was a cost to enabling people to be able to onboard customers using a paper-based KYC. Now today, using Aadhaar, we've actually created a provision where you can onboard a customer without any papers in a matter of 3 minutes. So even when we were training the Dakias, we invested almost 1 crore man hours in training 250,000 Dakias to be able to onboard customers and do transactions for them. Now, it was only a simplified ecosystem which was leveraging Aadhaar, which was paperless, that we could do this right at the house of the customer. In any other scenario, it would not have been possible to enable this. So I think these have been very important factors to enable and create what has happened today at scale.
Thank you. So well explained by you, Suresh, and thank you for touching upon those four factors, and also driving home the fact that while financial literacy is important, it's a digital financial literacy that's extremely important to bring the inclusivity of all Indian population into the mainstream of finance. Thank you so much for putting it across to our participants so clearly and so lucidly. Suresh, what are the innovative models of digital financial inclusion practiced in other countries? Like I said in your opening remark, you have worked with in other countries also. You also worked with M-Pesa, which India can replicate for powering the second wave of financial inclusion.
So I think, KK, clearly the point being, I think, as we were talking till now, I think India itself has become a role model for the rest of the world.
Yes.
Because whatever has been created here, and again, us being such a diverse country, and with a diversity in population, with the fact that there's an informal workforce which needs to be taken care of, I think one of the strongest points has been that how do we operate as a welfare state?
Yes.
Which means how do we create social benefits at the last mile and enabling those digital benefits through our DBT schemes and all, I think we ourselves are a role model for the rest of the world today.
Okay.
Some of the learnings clearly where other countries have done well, I think one of the biggest examples when we look at mobile financial services has been M-Pesa itself. M-Pesa in Kenya, where it started, has been one of the most successful, and even to date, it remains one of the most successful business models on which, today, if we look at it, the entire Kenyan economy for small-time payments is working on that. I think the things to learn and which we are seeing happening over here, that how do we extend it? Today, if we see that even we are looking at the pillars of, when we look at the pillars of financial inclusion, savings account opening is one part, payments become the second part. So these are two things which come in very quickly at an early cycle of financial inclusion. What really follows after that, lending becomes a very important factor. We can look at, various lending models, whether it is peer-to-peer or institutional. Now, if we look at our own country, we are today at the early stages where we say that as more and more people start transacting digitally, we will be creating a lot of data. Now, there are very good models which we see, especially in sub-Saharan Africa, where they are actually today using transactional data to create credit surrogates.
Yeah.
So to put it in perspective, it is about, say, what sort of payments I'm making. If I'm a small business owner, what sort of turnover do I have? Now, all this, if you're doing it digitally, it is very traceable and it can be shared to a lending institution and they can take a credit decision on you.
Right.
Now, these are some of the models which we need to see, which are already building in India, but we need to see what are the best examples. And that's where some of the good models you see overseas, which are working on transactional flows, which can be implemented over here, I think would be a very important factor to bring into our country. The other thing very clearly is how do we address the supply chains? So as I spoke about earlier, and even now, I think we are today finding a lot of organizations which had digital as one of their pillars for customer engagement and providing of services, be it delivery channels, be it access channels for procurement purposes. A lot of organizations have brought forward all their plans, and what was earlier being worked out as 2 to 3 year or 5 year plans have actually now been implemented in some cases in a matter of weeks or months to make sure that people remain up and running. And I think that is critical for us at this juncture to see that how do tech enablement provide us an ability to create this supply side and demand side connect.
Okay, thanks. So in this during this time of COVID, has the supply chain with whatever tech we have got, has it been able to fulfill some of the requirements?
I think absolutely. If you see, and I'll take a few examples over here, and these are generic, without naming particular companies. Today, if you see one part, as we were saying, if you today look at your own daily life cycle, when you look at your consumption, the fact that today we are all homebound, we don't really have the ability or limited ability today as the lockdowns are getting opened to be able to go out and buy services. Now, be it your daily needs, and we've seen a lot of innovation happening in the hyperlocal space, where your ability to procure and your ability to pay, new business models are coming in, and that is getting enabled. Now, whether you're sitting home and you're ordering all your groceries, your deliverables, how are the orders being placed? How is the delivery being done, which is completely contactless? And how are you able to pay remotely using digital services? Now, that has been one area which has worked out pretty well. And I think whatever hyperlocal services were there, as we all know, there are today statistics to say those businesses have grown multifold over the last few months in terms of digital procurement and delivery. The second side which we are seeing is all your small vendors. And I was just reading a couple of days ago a very interesting report. There are today new startups. There are companies which are focused on business models to create simple payment and procurement models for, let's talk about your newspaper vendors, your milkman, your dhobis or laundrymen. Earlier on, the behavior was they would come to you not at the end of the month, maybe 15 days after the month ended. They will come, they will give you a bill, you would look at what you have consumed, and you would pay in cash. Now there are today models which are getting created where they can maintain their entire inventory. So bookkeeping. So it is not just about saying how are payments getting enabled, because today a lot of focus has already gone in, and we know that with UPI, with IMPS, those basic infrastructure is there. So today, even with companies like a Google Pay or a Paytm, or let's say even a WhatsApp Pay, you can pay very quickly to anybody.
Yeah.
But then the person who's raising the bill on you, how is that person raising the bill? How do you enable recurring payments? And we are seeing UPI now going to the next level to talk about recurring payment capability and all. So these are interesting business models. And I'm seeing companies which are enabling these models are actually taking a further vision where they're also looking at saying that as we are capturing digital turnover for these small time vendors, can we now look at their digital data to be able to provide credit to them? And that is coming around very well, because ultimately that was the missing link. So when we look at even from a Reserve Bank of India perspective, when they have issued the account aggregator guidelines, where they have created a framework in which how institutions can share data based on consent being provided by the owner of the data, which is the consumer, for the consumer to get financial services. I think that is an amazing sort of business model where you're actually empowering the person within a very well-defined framework to use their own data for getting or availing financial services. And I think this is all coming together, and a lot of new business models are actually not just looking at now payments, they're looking at the entire end-to-end supply chain. To summarize, they are looking at procurement, they are looking at bookkeeping, they are looking at payment capability, and then they are looking at lending being created based on transactional flows and digital data. So I think it's coming around a full 360 degrees. And that, I think, is what is very important for us as we go forward to enable more and more of these ecosystem players to come into play.
Excellent. Thank you. So ladies and gentlemen, I continue to have a discussion with Suresh Sethi. We are past the half an hour mark since we started the program. And please send in your questions early, because this is a topic of extreme importance, right? If it's all about bringing the entire unbanked population of India, which is large, to the financial mainstream. And Suresh has done a yeoman work, in that area of integrating the entire financial world with the unbanked. So I look forward to your questions. Please send them as early as possible so that I don't miss out any of your questions. Suresh, let's talk about business correspondence. Okay, so business correspondence drive the sustainability of last mile delivery of financial services. I think this is one important cog in the wheel, which has been very important. When I was in TCS and I started with the financial inclusion services for many banks, this is one area I found it so difficult to get through, because the last mile connectivity was a problem. So what are your recommendations for improving the effectiveness and reach of last mile distribution of financial services?
So I think, KK, you picked up on a very right point, and as we were speaking earlier, this actually, when we look at the BC model, this is the last mile infrastructure, which becomes the fourth leg of the JAM trinity, right? We have a trinity and we have a fourth leg, which is effectively our cash in, cash out points, which are enabled by the BCs.
Yes.
Now, I think one of the things which has in some manner got addressed and now got leveraged more, especially during COVID, has been the interoperability of the BC. Because first of all, for sustainability of the BC, it is equally important that some measure of interoperability is there. Because if I can provide services only for one organization, I may not have enough, economic activity within that organization to be viable. And I think to improve viability, one, interoperability is important so that a BC can provide services across a cross-section of institutions. And very clearly, we've seen during the COVID period, and which was exactly the example I was giving for India Post also, that the Dakia today is acting as a last mile cash in, cash out point for all banks, not just for India Post Payment Bank. And that increases his or her viability and also the institutional viability. The second thing equally important, since we are on on the topic of viability, becomes the part which I think has two aspects to it. One is digital financial literacy. So today, if we see, a lot of our BCs are today trained to open accounts and to enable payments. So the moment you talk about other areas like insurance, you talk about investments, you talk about, and within investments, there become various parts like, whether it is mutual funds or whether you're talking about some other type of investment classes. Similarly, you're talking about further, financial products which can be provided at the last mile. So that is very important that one, we have to make sure that more efforts are, or rather more investment is done in the literacy of the business correspondent agents so that they can provide multiple services and not just be focused on account opening and payments. Now, one set is clearly the financial services. And today, as we realize, the other very important stack which is coming into play is the non-financial services. By non-financial services, I mean services in the area of education, in the area of health, in the area of agriculture. Now, we need to use the same business correspondent agent to be able to provide those services also. There are some early examples where these services are being provided, which I think are good sort of pioneering examples. But that is what will determine the viability of this ecosystem. So if there's one agent who is today trained to provide services across a cross-section of financial services, plus stack it up with non-financial services, it will create a much more viable model at the last mile and will ensure that this then becomes more sustainable than what it is today. So I think that is where the focus needs to go, both in terms of training and in terms of interoperability and providing services across institutions. And I think we are already on that journey in some manner of speaking.
Thank you. Thank you so much. I relate to this so much, Suresh. I understand the problem that we are facing. So on the business correspondent, we have a question from Umakant Bijapur. He asked you a question, Suresh, whether India Post Payment Bank has corporate BCs other than postmen.
So I think India Post Payment Bank.
Suresh,
can you hear me? KK, can you hear me?
Yeah, I can hear. You go ahead, sir. Okay. I can. Go ahead.
I was saying India Post Payment Bank, when, as you're aware, you mentioned, the Department of Post at that point of time applied for the license to establish a payment bank institution as per the guidelines issued by the Reserve Bank. Now, there is a very interesting sort of relationship over here. Now, while on one side, the Department of Post naturally is the promoter organization, they applied for the license and received the license. At the same time, the whole idea was to leverage on the network, the human strength and the physical network of the Department of Post. So the first primary corporate agent is the Department of Post itself. And the first focus of the bank has gone towards enabling the entire postal network to provide last mile services under a BC arrangement. So that is where the bank is today.
Yeah. Okay. I have another question to you coming from Ajay Shukla of ICICI Bank. He says, apart from providing tech-enabled liability product, how can India Post Payment Bank is creating borrowing opportunities for rural India, and how is it different in lending other than the lending from what the public sector banks are doing?
I think one thing we all know that the payment bank guidelines today don't allow payment banks to lend on their own book. So the payment banks today are not created as lending institutions, but at the same time, there is a provision to tie up with a scheduled commercial bank and provide lending services. And I think a lot of what KK, you and I discussed earlier. So I think one of the critical components of a payment bank business model today, be it India Post Payment Bank or any other payment bank to that extent, all payment banks are by default going to be institutions which will have a lot of transactional data as we go forward.
Okay.
Because we have transactional data, we would be even addressing communities which have no other credit surrogates, which means they may not be on CIBIL dashboards, they may not have taken loans. So on the basis of the virtue of transactional data, Today, any payment bank is adept to tie up with a scheduled commercial bank and offer a lending product, but the underlying risk will have to be managed by the partner bank. So I think the things which an institution like India Post Payment Bank brings, one, it brings a huge customer database. It brings a rich digital transactional history of the consumers. Similarly, it brings the last mile accessibility. So when we tie up with any institution, we'll be able to reach out to points where it was naturally, in a lot of cases, limited or restricted for that institution to have that sort of footprint. So disbursement of loans, collection of loans through, IPB accounts, these are things which can be enabled and become a complementary sort of network where while the bank per se on their own book can be liability focused, but with a partner institution can build an asset book and provide asset products in that case.
Thank you. Right. Thank you, Ajay Shukla, for asking this question. Very pertinent question. We have another question from Deep Shah. Ladies and gentlemen, when you put your question, it will be good if you can put your name as well as from which organization you are. Unless you have some corporate restrictions, please put your name and the company name or institution name, whatever you come from. So Deep Shah asked you a question, Suresh. He asked about the interoperability of BC through AEPS. Okay, so you mentioned about the interoperability of BC through AEPS. However, the success rate is almost at 50%. What do you think to improve this service delivery?
No, that is right, and that is a very appropriate observation. I don't know whether it is 50 or it's thereabouts, whether it is more. But yes, there are rejections because since you are working in an interoperable banking ecosystem. So yeah, currently I think in some of our discussions which we've had with the regulator, this point is very much where the industry sees this, because the moment you're working in an interoperable sense, and even if you look at our other, payment settlement systems, ultimately when two institutions are having a handshake, you need to build the natural rigor to ensure that when I hand over from one institution to the other, there are enough safeguards to make sure the transaction doesn't fall. And in AEPS, we are seeing a lot of, declines in cases. Now, one scenario is where naturally the customer may not have money in his or her account, and when they are withdrawing money, the transaction gets declined because funds are not there. Now, let's forget those type of rejects. The second type of rejects are the ones where the counterparty institution is not able to honor the transaction. So I think what the regulator representations we've done is that there has to be a more sharply defined SLA to be built around the APS transactions, be it in terms of that if I'm rejecting a transaction for technical reasons or for genuine reasons, there should be a timeline in which funds are reversed. Similarly, there should be other handshakes which are there in place. So these are some of the recommendations which we have given to the regulator, and we hope that will address some of these problems. Because I think we've done a fairly good job in terms of interoperability on our other transactions. We need to have a similar sort of rigor and framework and basic standardization and rules being defined by the regulator so that it becomes a consistent experience for the customer, irrespective of which organization is providing them the service.
Thank you. So thank you, Deep, for asking that question, Shadeep Shah. Thank you, Suresh, for explaining it so well. The why the rates are low. It could be 50%, it could be plus minus 10%, it doesn't matter. But I think you came up with very good factors that can improve this efficiency. Suresh, a large section of our workforce comprise of unorganized labor, okay, as part of what we call as the gig economy. Okay? So whether the migrant or some other kind of laborers, they form a large part of the gig economy. How do you see digital playing a role in addressing the challenges faced by them?
So I think, KK, we discussed some of it when you mentioned the migrants.
Yes.
So I think one is basically we talked about saying how we are enabling subsidy to reach them so that at least daily needs are met. Because a lot of people who are virtually working on a, pay by task sort of behavior, which is what is there in the gig economy. The moment you don't have a day's job, you don't have money, and a lot of these people don't have savings. They don't have, security cushions on which they can last or sustain a prolonged period of whether you call it a lockdown or a pandemic or a crisis. And that is where the challenge comes in. So while subsidy becomes only one factor, the second part naturally is how to get the economy up and running so that supply chains come up and how their need is addressed. I think a very important component that we need to address is about social security. Now, social security, as we see it, when we look at our national payment, national pension services or other sort of, social security parameters, all of them are today focused more on people who have a salaried job. And when we look at the fact that 80%, 90% of our workforce is actually working in the informal sector, we need to create a security network for them. And that is where a redesigned social security parameters have to come into play, keeping in mind both the seasonality of their pay, the variability of pay that are getting. Similarly, migrants, by virtue of the fact that we are calling them migrants, is also a community which is going to be moving all over the place. So how is the social security going to be portable in nature? So portability of the social security model has to come into play. So I think we have, as a country, we need to now focus on building a social security net for these people so that in challenging times like these, it is not just about providing subsidy, which cannot, go over too many cycles, but there should also be a basic net which provides them the safety and security to last out over a period like this.
Excellent. I think that's a great suggestion to you from you. Direct benefit cannot keep going on and on, because at the end of the period, we should know where the money is coming in. So there could be a lot more taxes and all coming. But setting up something like a social security net, I think it's a fantastic idea, and I hope someday we have that. So we have we have more equitable distribution of money. I have one audio question also coming to you. Suresh, are you okay to take audio question directly?
Yeah, sure.
Okay. Harish, can you please unmute and ask the question directly?
Sure.
Harish is an experienced banker.
Sure. Suresh, hi, Harish Prabhu here.
Hi.
India, I mean, the ubiquitous postman, especially in rural India, used to be more of a friend, philosopher, guide to the family in terms of not only delivering the mail, getting the money from money orders, and probably writing, letters also and what have you, right? Now, obviously, I'm not talking of, rural India. Now, with the fact that you've become a bank and the role of the same postman, there's no question of mail delivery, or rather, there is limited, but it will be a much more in-depth interaction with the rural folks because you are now dispensing banking services. Maybe he's carrying a POS machine or a micro ATM machine, etc. and all. So how has the role of the postman changed dramatically? And does it really, entail a much more efficient dispensation of banking services for India Post Payment?
So Harish, I don't know if you caught on earlier. So what we have done today is that all the postmen have been given a smartphone and a biometric device.
Sure.
And considering the fact that they are acting as a business correspondent to a bank, which is India Post Payment Bank, they are effectively connected to the core banking system to provide real-time online services, right from opening of accounts to doing any sort of transactions in an assisted mode for the customer.
Sure.
So with this being there in place, you can envisage virtually like a teller counter walking to your house and providing you the entire bouquet of financial services. So that is one enabler we provided. So all services are digital by virtue of the fact that we are leveraging on Aadhaar and we are leveraging on the India stack. All these services are again paperless. So you are never really, seeking any paper-based documentation from the customer. you are doing all transactions digitally, and you're using your biometric information to provide authentication and initiation of transactions. So it is a very digitized service we are providing at the last mile. Now, the question you asked was that how has it changed the Dakya's model on the ground? So you're absolutely right. Friend, philosopher, guide. I think that was the starting point for us also, because Dakya, by virtue of being a son of the soil and being a very integral part of the social fabric of the village economy, was a very trusted, person. And that has played well, because today when he's providing financial services, a lot of people are very comfortable in working with the Dakya and opening, digitally opening accounts and being sure that their money is safe and secure. And hearing from the Dakya, what we spoke about in terms of financial literacy and all. Even as we look at the other services which the Dakya was providing, you are spot on, because over a period of time, what you would see as the daily life cycle of a Dakya, a lot of things, a lot of their daily behavior and daily activities have also changed over a period of time. Because other than the logistics services of delivering parcels and all, money orders, similarly, delivering of mail services, which is dark and all these activities have over a period of time gone down. So yeah, there is the ability now to give him, new services and new lines of business on which he's equally adept now after all the training to be able to provide a new bouquet of services. So this makes the Dakya a very important and socially relevant, player or partner in the rural ecosystem as he goes about enabling rural financial inclusion. And he becomes even more relevant today than what he was earlier in continuing on this line of business.
No, thanks for that explanation. Just one more thing is that, so do these Dakyas today cover more customers per day? Because, it's a much deeper engagement. So they will be taking time per customer more than, just delivering mail. And secondly, do they sort of have any other mode of transport rather than, cycles or whatever? This is a purely informative question.
So there are two parts to it. So I think one, considering the transactions are digital, a lot of focus was, we made a very focused study to do, time motion studies and everything to say, how do we make the transactions as minimal clicks and all, which we all talk about, when we are dealing with devices and gadgets. So our entire account opening process does not take more than 3 to 5 minutes, which if you can imagine, if you're using a paper-based process and even, filling up boxes or taking things, which takes a much longer time. And even transactions to that extent with biometric authentication. And I'll share with you very quickly in the passing, we've even introduced things like QR cards, where we've actually embedded the customer's account number in a QR code. And we issue this card, and this card is exactly like your debit card, which a customer can provide to the Dakya, and the Dakya actually scans the card, and the entire account information gets populated into the Dakya's device for them to then initiate the transactions for the customer. So various measures have been taken to make sure that there is minimal data entry, minimal, clicks to do transactions. So therefore, we've focused on making it very efficient and quick transactional capability on the ground. Now, coming to the fact that how are these people providing services? So we have two ways. One is when the Dakyas are going out on their beat. Naturally, they go out on a beat where they have various services to do. And as they are providing these services, they are also equally equipped to provide any financial services for India Post Payment Bank. The second point is that we've almost created an Uber-like ability. So if you want a doorstep banking service, you can actually call up, and your service, there is proper load balancing and all done, and the service gets allocated to the nearest Dakya, who will visit you within a defined SLA and provide you that banking service at your doorstep. So various measures have been taken to make sure that transactions are fast, quick, and efficient. Similarly, how do we go about doing the beat of the Dakya, and how do we go about managing on-demand services from a bank's perspective? And that is how the entire ecosystem is playing out today.
Thank you.
Thank you very
Harish.
much. Brilliant. Thank you. Best of luck for
Thank you, Harish. Thank you, Suresh. I think that is wonderful. And to say that, they work on a defined SLA, so that the delivery of services is within the time period. It's so heartening to hear, so I think it's a great transformation that's been done. The next question that's coming to you is from Mr. Tripathi. He's the editor of ETV Online. Mr. Tripathi, can you unmute and ask the question?
Good afternoon, Mr. Sethi.
Good afternoon.
I just wanted to know whether India IPPB is participating in these schemes, and what was your share before COVID and during the COVID? Because a lot of money is going to PM Garib Kalyan scheme. So can you give us some idea if you are participating in this DBT transfers?
Yeah, so we have been a very integral part of DBT disbursement right from the outset, because that was one very critical focus for the bank, and considering the last mile reach. I don't have the latest numbers. Yes, DBT is a huge ecosystem out there. But remember, there are two parts to it. So we are today participating in DBT disbursement, both for money coming into India Post Payment Bank accounts and also for money going into other accounts. Because as I mentioned earlier on with AEPS, Dakia today has the ability that if DBT is received in any Jamnan account with any other bank, a customer at the last mile can actually operate any bank account and still withdraw money through the Dakia. So yes, and as I mentioned that with COVID coming in, one statistic which is already there is that we were one of the top 5 banks in the country for disbursement of transactions on AEPS. And we've clearly taken a very pole position in enabling it for the customers.
I have a follow-up question. Post offices have the largest network in the country, even much more than the total branch network of the scheduled banks. Is there any plan to offer, but they are pretty bad in terms of customer services. CBS is pretty bad, the services are pretty bad. I have first-hand experience. Is there any plan to offer the services through IPPB that are offered by normal post offices, like opening up senior citizen fixed account and senior citizen payment account, saving accounts? Any plan to offer them through your network?
So see, there are two parts to it that we are actually, as I was mentioning earlier, leveraging the postal ecosystem only. So any post office today has also a counter at which you can get India Post Payment Bank services, and at those counters you can open a India Post Payments Bank account. Now there are certain schemes which Department of Post runs as agency banking for the Ministry of Finance. Now those schemes and accounts naturally we as a bank cannot open. But as far as India Post Payment Bank accounts are concerned, you can actually walk into any of the post offices which have been enabled. And I was mentioning earlier that over 135,000 post offices today are enabled to provide IPPB banking services. You can walk into any of them and open a bank account for IPB over there. The other thing I will add over here is, which was equally important for us, because as we know and what you are alluding to, Department of Post also runs a post office savings bank, where we have these post office saving accounts. Now, since the post office savings bank is outside the RBI ecosystem, you could earlier on only deposit cash or withdraw cash at a post office counter. So what we also did when we set up IPBB, we linked the two accounts. So if today you have a post office saving bank account, you can open an India Post Payment Bank account and link the two accounts. Your IPB account is fully interoperable with the banking system, which means you can send money to any bank, an SBI or an ICICI bank from an India Post Payment Bank account. But on your mobile banking app or on the Dakia app, if you link the two accounts, you will actually see both the accounts together. So you can actually move digitally your money from the post office saving bank account into an India Post Payment Bank account and become completely interoperable with the banking system, which means you no longer need to physically go to a post office to operate your post office saving bank account. You can actually do it from home.
Okay, thanks a lot. Thanks a lot.
Thank you very much. So, ladies and gentlemen, we have come to the almost the 1 hour, 4 o'clock, past 4 o'clock. Suresh, if you don't mind, can I extend it by a couple of more minutes?
Sure.
There are quite a few questions coming in. Yeah. So I have a question from Mr. B.S. Murthy. Mr. Murthy is a very experienced banker. Welcome, Mr. Murthy. What is the technical, operational, and business feasibility of operating P2P lending platform by Post Payment Bank, of course, subject to regulatory clearance?
I think that is, see, end of the day, if we see, I think the first question comes is that what is the operational feasibility with the products and services that a payments bank has? And when we are looking at only payments and when we are looking at only, savings accounts, which means a deposit taking capability being in place, we naturally allude to the fact that we need to have other products and services stacked on top of it to create a more viable model. And that is where this entire discussion around saying that a payments bank can today tie up with third-party financial institutions to offer insurance, to offer investment products, to likewise offer lending products. Now, in lending, clearly, the business model remains the same. So it is all about source of funds and what you will earn at the margin when you are lending out. And that is what the P2P lending models are. So I think from a payment bank perspective, naturally, we have to be dependent on another institution on whose books the credit resides. So as a payment bank, we can only earn commission as part of the net interest margin which a asset product creates. And our ability to generate business from there would come on two factors, which is one would be the commission, and second would be the fact that as an institution which is digital in nature, we will over a period of time be also providing transactional data of the customer. So there could be a factor where we look at monetization of the data. So these are the two aspects. Now, I don't have a very well-defined business model to share over here in this call, but I do clearly see these two as revenue streams to look at any P2P lending model for a payments bank.
Thank you. A last question that, very briefly, has universal service obligation, as USO as you call it, has been achieved through India Post Payments Bank? Your views?
I think to extent, as we said earlier, and I think somebody alluded to it, yeah. India Post virtually, doubles the physical branch network, because if you look at the total number of bank branches in the country, as a single institution, it has an equal footprint. And I think the important part to remember also is that 80% plus of the post offices are actually in rural India. So from a rural banking perspective, as I said right at the outset, India Post Payment Bank has been able to actually increase the rural banking infrastructure by 2.5 times. So in order to reach every household, in order to provide doorstep services, yes, a large part of the universal obligation of providing accessibility has been achieved by India Post Payments Bank.
Thank you. Thank you, Suresh. So, we have gone past the hour, and we don't, want to hold back our guest. There are many more questions that are coming, and I think I have to put a stop. Ladies and gentlemen, thank you for your participation and, asking so many queries. That shows the interest that you have during this time of COVID. People are thirsty to know a lot more information, a lot more knowledge that they want to gain from our subject matter experts, such as Suresh Sethi. Suresh, I have to end it here. I'm sorry about it. I myself had a few more questions to ask you. Participants have, but time is always a factor. I have to end it. Thank you very much for coming, spending your time with us. We would love to have you once again, because there is so much to ask and learn from you. And so this is a topic which is of, I think, great interest to everyone. Thank you once again for coming and sharing your knowledge with us.
Thank you, KK. Thanks a lot for creating a very interesting dialogue. And I hope it was informative for everybody. And I congratulate EPS for creating this forum. I think it's doing very good work. So all the best to you. And it's a pleasure being on this. Thank you very much.
Thank you very much. Bye-bye.